In this video, I want to go through and highlight certain aspects of a research report put together by Grayscale on the Bitcoin investment thesis. So I think with Bitcoin at near all-time highs, that it would be a great time for me to go through and read what Bitcoin and Grayscale are all about when it comes to the future and investing in a digital currency. So whether you're new or even if you've already invested in some of Grayscale's products, I just want to go through and overview what this company does, what they're all about, and how they see Bitcoin and the rest of the cryptocurrency industry. So the Bitcoin investment thesis. Bitcoin is undoubtedly one of the most fascinating creations of the 21st century, an entirely electronic currency, its use and monetary supply governed by computer code. Unlike traditional fiat currency, which is controlled by central banks and governmental bodies, the Bitcoin network is decentralized and maintained by thousands of independent computers on the internet. Bitcoin has many unique qualities that may make it look and feel like a safe haven or hedge. It blends some features of commodities and currencies while also displaying distinct characteristics that don't have an analog in established finance. Cryptocurrency is truly an asset class unlike any other. Let's take a look at some of Bitcoin's characteristics that may make it an attractive investment. Diversification is a rewarding strategy. Stocks and bonds may also be stable investments, but investing in digital currencies like Bitcoin may provide further diversification with higher returns per unit of risk as investors seek to build more resilient portfolios. Bitcoin has historically performed as an uncorrelated asset. As a result, it may provide benefits to an investment portfolio that other assets may not be able to match. By properly sizing a Bitcoin allocation as part of a traditional investment portfolio, about a 1 to 5% allocation, the risks of investing in Bitcoin can be mitigated relative to potential gains. This is the power of diversification. Bitcoin has piqued the interest of the next generation of investors. With an estimated $68 trillion in wealth transferring from older to younger generations over the next 15 years, we may see more investment dollars make their way into uncorrelated assets like Bitcoin. One survey showed millennials are much more likely to buy, hold, and use Bitcoin, the majority of which haven't even hit their prime earning years, despite the fact that most financial advisors don't currently allocate their clients' portfolios to cryptocurrency. As a new generation is evaluating where and how to invest their money, Bitcoin may become an interesting part of the mix. And you'll see that nice graphic down there of the transformation of the demographics of wealth, shifting towards younger generations as happens with time. Bitcoin's infrastructure is strong. While use cases are still emerging, Bitcoin's global transaction network enables it to be sent securely anywhere across borders in any amount at low costs as seamlessly as a text message and without the need for trusted third parties. While we are still in the early days of the technology's development, the implications of this capability are massive. Removing the need for trusted third parties enables billions of people to transact without the need for robust government enforcement systems, making international commerce, trade, and finance more accessible than ever before. Further, because of the innovative digital architecture of Bitcoin's network, its core infrastructure has also never been hacked or brought offline by attackers, despite countless attempts. Bitcoin as a safe haven investment. As a scarce asset, there will only ever be a total of 21 million Bitcoins created. Bitcoin has demonstrated many of the same traits as traditional safe haven investments like gold. It has been shown to perform well in both normal and volatile times. For example, during past market shocks, including Brexit, Grexit, and heightened trade tensions between the US and China, Bitcoin outperformed traditional equity and bond markets, sometimes by a significant margin. During a time when the US is seeing unprecedented fiscal stimulus, the idea of a currency that is disconnected from the geopolitical development has made Bitcoin an attractive prospect to many investors. It's still early. Bitcoin has the potential to capture value from a spectrum of large and diverse markets. Its value today is only a tiny fraction of the markets it stands to disrupt, which reaches well into the millions of dollars. What if Bitcoin takes even a quarter of the store of value market held by gold? What if it becomes the currency of choice for a few of the more unstable nations whose currencies are plagued by hyperinflation? These are just a few examples of the markets that Bitcoin has the potential to disrupt and, in doing so, gain from in value. Bitcoin's unique properties and digitally native identity may make it a compelling investment prospect for investors of all types. With the right allocation, Bitcoin may offer upside potential and has demonstrated superior risk-adjusted returns compared to other asset classes over the last decade. If basic principles of responsible investing, diversification, investing for the long term, appropriate risk management still hold true, it's clear that there is a home for Bitcoin in many portfolios. For those investors already familiar with Bitcoin and who are seeing even further diversification within the asset class itself, it's also worth noting that different digital currencies are uncorrelated with each other. And now we get on to Bitcoin's unique qualities. Digital currencies like Bitcoin aren't just a new investment. They represent an entirely new asset class unlike any other. Bitcoin has the potential to revolutionize many aspects of our lives. Just as the computer and the internet radically transform the way people store, process, and exchange information, Bitcoin radically enhances the ways we can store, process, and exchange value. Digital currencies share some of the same qualities as commodities and currencies. They are, however, generally uncorrelated to other asset classes and the broader market, meaning that there are many times when digital currencies don't exhibit any of the characteristics we associate with traditional asset classes. When it comes to Bitcoin, it's helpful to think of it both as a store of value and a medium of exchange. Most importantly, investors will have an easier time understanding the role it can play in a portfolio if they understand its unique underlying characteristics. Bitcoin possesses a superior composition of good money qualities for a global digital economy. It is independent, scarce, verifiable, portable, and divisible. Many view Bitcoin as a new and improved digital gold that is better suited for our modern world. Understanding these aspects of Bitcoin is key to understanding it as an innovative financial product, one that should be seriously considered as a financial investment. Bitcoin is independent. One critical difference between Bitcoin and other asset classes is that there is no central authority that governs Bitcoin's monetary policy or global distribution. Changing political climates do not impact how much Bitcoin is created daily. The ability to send and receive Bitcoin cannot be controlled by a government. Nations and economies might rise and fall, but Bitcoin was designed to remain separate from those events. In fact, many of Bitcoin's characteristics are hard-coded into the Bitcoin network, and due to the decentralized nature of this network, its code cannot be arbitrarily changed. Bitcoin supporters and investors alike see this as beneficial to the digital currency, given its independence from governmental actors. After the last Bitcoin is mined, around the year 2140, no additional Bitcoin will come into circulation. This scarcity makes Bitcoin similar to gold, except unlike gold, there are no undiscovered Bitcoin deposits that could skew the market. As Bitcoin adoption continues to grow, there will be increasing competition for a decreasing amount of Bitcoin. Bitcoin is verifiable. One of the most enduring qualities of Bitcoin is the network's ability to prevent fraudulent transactions. Despite more than a decade of attempts, no entity has been able to alter the Bitcoin transaction log. No entity has been able to counterfeit Bitcoins or fake that they had more Bitcoin than they really did. This is due to the cryptographic nature of the Bitcoin network and the blockchain technology it introduced to the world. Bitcoin also doesn't need a central processor to be verified. The function instead is spread throughout the Bitcoin network through the use of a blockchain technology, utilizing thousands of computers around the world that each maintain an identical record of transactions taking place on the network. Bitcoin's blockchain allows transactions to be verified anywhere, anytime, from any connected device. Bitcoin is portable. Because Bitcoin is a digital currency, it can be stored easily on any digital medium. Anybody can create a Bitcoin wallet without going through the gatekeepers of financial institutions. Bitcoin can even be stored in a wallet that only the owner can access. What this means is that Bitcoin is both widely accessible and also incredibly secure. It can cross borders in an instant. An internet connection is all that is required to effect a transaction in Bitcoin to go to anyone, anywhere, at any time. Bitcoin is divisible. While a US dollar can only be broken into 100 denominated parts, cents, a Bitcoin can be broken into 100 million identifiable pieces. As there is no need to own an entire Bitcoin, many investors start by owning a small fraction of one, knowing they can always invest more over time. For investors who are curious, yet uncertain about the investment risks associated with Bitcoin, this quality offers nearly unlimited flexibility for Bitcoin investors to insert an exact dollar amount they want. Taken as a whole, these individual characteristics begin to paint a portrait of a truly unique investment that displays significant practical uses in the real world while also retaining many attractive elements of financial instruments. Bitcoin's independence and uncorrelated nature to global markets make it a potential safe haven asset for investors looking to hedge against the shifting monetary policies that have downstream effects on many other financial assets. The fact that this is immune to counterfeiting while also being widely accessible and easily divisible gives it immense value to everyday users more likely to drive global adoption of the digital currency. Its verifiable scarcity means that as its uses continue to grow, increasing competition to own Bitcoin could be a major demand driver for its price in the years and decades ahead. And just for some more context, a blockchain is a digital ledger that maintains a record of each transaction taking place between participants on a network such as the Bitcoin network, capturing important details including the sender, receiver, and any amount transacted. Each digital currency relies on a blockchain or ledger, but this powerful technology has use cases beyond capturing the details of digital currency transactions. Blockchain technology has attracted enormous attention and real investments from blue-chip corporations and governments alike as they seek to recognize the real-world applications of the technology, ranging from supply chain management to voting in national elections. It's still early, but these movements fuel optimism around practical applications of the asset class. While digital currencies have historically demonstrated price volatility in the short term, there is a high upside potential for investors with time horizons and risk tolerance to remain invested in the long term, as you'll see by this graph, with only a plus 1% increase in digital currencies in that portfolio. So how can you invest in Bitcoin? Purchasing Bitcoin directly versus purchasing Bitcoin investment products. As Bitcoin isn't a physical commodity, purchasing and storing it directly often comes with barriers to entry that can feel especially burdensome and overly complicated. There are now a magnitude of options available to investors who may be interested in investing in digital currencies. Below are the two main investment pathways. Investing directly buying or selling, transferring, storing, and safekeeping Bitcoin has been around since the asset class's adoption. So the Bitcoin wallet, as Bitcoins are digital assets, they can be stored in physical locations like physical cash. Enter the Bitcoin wallet, a secure digital hub where investors can store their Bitcoin assets and carry out transactions. Bitcoin wallets can come in many forms, the most popular of which are desktop and mobile applications and physical hardware devices, and those are protected by a password of a long alphanumeric string of characters. And you can also gain access to a Bitcoin exchange that's pretty much just like Coinbase, which allows you to buy and sell. So you are free to trade, pretty much like a brokerage account. So that's pretty much it for now. I just wanted to read through and highlight the best parts of this 22-page research paper put together by Grayscale Investments. Full disclosure, I did buy just very small positions in Grayscale's Bitcoin Trust and Grayscale's Ethereum Trust, just so that is out there for public knowledge. But I think this is a great resource. What they've put together is really ARK Investment-esque, and I'm really grateful that they are putting out their research and showing the Bitcoin bull case as well as the bull case for really any cryptocurrency. And it's something I'm getting more and more excited in, the potentials of Bitcoin and cryptocurrencies in the long term. And Bitcoin's valued under $500 billion today. And if you think about it, they're attacking trillions of dollars in potential market value. And the real near-term catalysts I see as someone who's just stepping into this world of cryptocurrencies are increasing adoption from just regular everyday people and especially businesses, them adopting it on their balance sheets. I'm really interested to see if Elon Musk and Tesla will even take a small portion of their cash into a Bitcoin investment. I know it's a long shot, but I think that them, other companies, of course, we've got Square, which I've talked about on this channel, all kind of moving toward that digital gold of Bitcoin and other cryptocurrencies. So I really think adoption and mass market acceptance of Bitcoin really just a few years out once businesses start accepting Bitcoin in every aspect of their sales. So what did you think about this? Do you learn anything new? I hope this was helpful. I try to pick out the best parts, and I just love to hear what you have to say. Until next time.